Happy Friday, everybody. Let's check out these Defiance and some of these Yield Max funds and see what's going on in the high yield universe. Okay, first we'll start with Triple QI. These guys sold the 19630 option 131 times for 65 bucks. Unfortunately, it's $39 in the money right now, but that still leaves these guys with a $330,000 profit and 61 cents positive earnings per share on the month, not to mention a 94-cent dividend estimate. So that's pretty damn impressive if you ask me. And JEPY, these guys sold 237 options at the 55.45 strike in the SPX today at the 1360 level. Unfortunately, those options are $34 now. They're 34 points in the money. So that creates about a $500,000 loss. However, fund's still up 39 cents on the month, and also the dividend estimate is 80 cents right now. Okay, so that's nice. All right, so that's the good news. Now, this one did not look so good. Okay, so this one, these guys sold 765 options at the 2045 strike for $10.52. Unfortunately, those options are 29 points in the money right now. So these guys have a $1.4 million loss, which is all right. That's, these funds make money some days and some days they lose money. However, this month has not been great. Not been a great month for Russell. I mean, as you can see, all the red on the chart. Now, there wasn't any red on this chart. Well, outside of today, and on NASDAQ, there's no red. It's all green. So, I guess between all three of them, there's probably the right amount of losses, but they're all focused on IWMY. So this right here is makes a good case for diversification, of course. Okay. All right, let's look at some of these Yield Max funds. Okay, so Tesla actually is down from the open, but pretty much it looks like it's going to fall back into this range it was stuck in forever. It looks like yesterday's action was a fake out. It's appearing that way. You don't know until it's too late, but appearing like that was a fake out. It poked its head up above the Bollinger Band and then just cratered and went back the other way, reverted to the mean. So, but in any event, I'm afraid if it gets stuck down here in this trading range between 175, 170, and 180, that it was in for, 3 weeks. We'll see. We'll keep watching it. Here's Coinbase. Of course, Coney trades options in Coinbase. These guys made a smart move. Last week, they got their strike blown out. So they rolled 15% out of the money, and they got an obscene amount of premium. They got $1.86, which comes to 73% annualized just for selling this covered call right here. Well, then the market kind of went sideways and then actually pulled back into Tuesday pretty big time. Well, they got a chance to, or actually, I don't know what day. I think it was actually on Thursday. On Thursday, they got a chance to cover these for 11 cents. And they did. So they realized, $1.75 in profit. And then they rolled to these two strikes and into next week. So they rolled down and out, down and out, down and out in Beverly Hills. That was a good movie. Nick Nolte's awesome. He's one of my favorites. All right, what's going on with micro strategies? Well, this is pretty much their strikes are in no danger. Let's just say that it's chopping sideways from yesterday, not really moving. Nvidia's up, of course. Now they've rolled their strikes into next week, and they still have some upside left. Not a whole lot of it. So what does that equal? 4 points. 3% maybe, something like that. I just eyeballed it really quick. So not a ton of upside for NVIDIA, which is their underlying, or which is the yield fund. NVIDIA is the underlying, but not a ton of upside for You know, they say these funds don't get upside, and they don't get a lot of upside. It's true. Because even this isn't a lot of upside. I mean, it's taken a month to get from 24 to 30. That's not a lot of upside in the grand scheme of things. But for a yield fund, that is a shitload of upside. That's incredible. That is incredible. They can only do as well as the parent asset or the reference asset can do. And NVIDIA is probably the best reference asset to have right now. So this is the best high yield fund to have. And I said it's not a lot of upside, but it went from 24.85. I mean, it is a lot of upside, but it went from, you know, we'll call it 25 to 30. So 5 points. So 1/5 of it's a 20% face ripper. Okay. Which is great for a high yield fund. Now let's check out this equivalent face ripper, 95 to 130. So what does that equal? 35 points on sets of 33%. So, you know, obviously we know, and that's one of the things, you know, when you do a covered call strategy is that you're going to underperform the parent asset, the reference asset. Having said that, if you can choose a reference asset that performs as best as possible, it'll damn sure help you out. All right. So that's it for YieldMax. Let's go to the buffer report. I was looking at the buffer report earlier and it was jacked up because for some reason, Google Finance cannot figure out that ULTY is not really down 8%. It paid a dividend yesterday. The price didn't change by that much overnight. The price didn't drop 8%. Anyway, and same thing with YMAX and YMAC. Well, anyway, when it does that, and I cannot find a workaround in Google Finance for that. If anyone knows that, knows how to get, I don't know. I'd probably have to write my own formula for the dividend, write the change from one day to the next day. And then I would also have to query and see if that underlying had paid a dividend in that 24-hour period. And if they did, I need to add that back in. I just don't have the programming skill to do that. If anyone does, feel free. I'd appreciate it. Okay. Now let's look here at the single stocks. Let me move this so you can see this a little better. Okay, well, it looks like TSLP is down. So so the buffer report, like I say, I need to do something different with this. The usefulness on this is limited at best, just because of issues like this. Now that I follow, so when I just followed one company, YieldMax, they just declare dividends once a month. It's not that hard to figure out. But now that I'm following multiple ones, and some days they have dividends, I never adjust for QDTE's dividends. I never adjust for those because that happens so fast. I never even know about it. So if Google Finance doesn't make the adjustment, and they're supposed to, and I never hear anything from you guys, so I assume they're doing a good job. But since I don't have that one, I don't know. QDTE and XDTE. I never adjust for their dividends. I don't even know what day of the week they pay. I guess I should look into that. I'm not that big into the weekly payers, and I'm not one of these people that think it's going to make a difference, the extra compounding. And the reason I don't think that is because the yield's lower. I mean, if the yield was the same, maybe, but their yield's lower. The yield's lower, and I want to say the total return's lower, but it's too early to know for sure. And I suspect the total return's going to be lower on QDT and XDT. If that turns out to be wrong, I'll be the first one to correct it. And if anyone in the comments knows that's wrong, tell me so I quit saying that. But I don't think QDT and XDT, they're yielding about half of Defiance, maybe a little bit more, because they don't take the overnight risk. They do single day options, but they sell them the morning of. Defiance sells them at 3 o'clock the day, but 4 o'clock the day before, right on the bell the day before. So the nighttime, the premium you capture for taking an overnight position is more. So anyway, QDT and XDT, they just take the daily position. Now there is a good side to that too. That should help their NAV more. In a bull market, QDTE and XDTE's NAV should do better because any of the gains that happen overnight, and you can't know that much in advance, but in a bull market, a good deal of the gains happen overnight. But any of the gains that happen overnight happen in an uncapped environment, right? Because QDT doesn't sell the option until the next morning. So So Defiant sells their option at 3 o'clock, and then overnight the market's up 1%. The next morning, QDTE sells their option. Now they don't get as much. They get about 3/4 or 60%, half. They get a fraction of some. Not a fraction. They get some percentage of the price, some percentage less of the price. And not hating on QDT or XDT. The compounding's cool and stuff. I just don't know. The jury's out. I just think the jury's out on them. I would rather have the bigger premium. I think the way SPY-T does it is the best compromise of all three of them. And as you guys know, because I'm obsessed with SPY-T, but JEPY and Triple QI have a pretty good thing going too, as does QDTE and XDTE. It just depends on your needs and how much income you need and the way you want to structure your investments. All right, guys. Well, I kind of filibustered here on QDT and XDTE, but I will let you go, and I'll be back at the end of the day with more. And I might even do a Friday live stream with an Ask Me Anything. Maybe we'll do that. Some days on Fridays, I do that just for fun. So if you guys are around today at 3, I'll probably go on right as the market closes or something. I thought that might be fun. All right, guys. Have a good one.